Hello, I'm Council Leak, and today I'm going to tell you about my project to predict the Dow Jones Industrial Average with sentiment analysis of news articles. So, a brief introduction to the problem space. What is the Dow Jones, or just the Dow? It's an index containing 30 of America's largest companies, and it's generally thought to be a proxy of how the U.S. economy is doing as a whole. So what you can do is you can buy shares of this index, and depending on how all 30 of the component members do, your money will either go up or down. So the idea behind my project is that I'm going to use news article sentiment about the Dow and the Dow's previous day performance to try and predict what it will do on the next day of trading. So the basic reason why this is so hard is there's this theory called the efficient markets hypothesis, and this states that it's impossible to beat the market because stock market efficiency causes existing share prices to always incorporate and reflect all relevant information. So basically the idea behind this is that as soon as new information is available, investors are immediately going to take action and the stock price will reflect that. So there's no time in between that you can actually get ahead of the other investors and make a profit. And stuff just moves too fast that you're not going to be able to actually use information to beat the market, is what it's called. So beating the market is just having better returns than what everyone else would have had if they just left their money in from the beginning. So knowing this, I knew that this would be a very difficult project and it likely would not have very good results. All the existing papers on the topic basically say it's not worth trying. You're not going to be able to beat just an unmanaged fund. So at the end, I'll compare over a year time frame. Like if I just put $100 in at the beginning, what would it look like at the end if I did nothing at all? And my test is going to be see if my model, if I had instead listened to my model and bought on days that it said to buy and did not buy on days it didn't say to buy, what would the difference be? So again, here's a broad overview of my basic strategy of the whole project. So the first step was to gather historic news articles about the Dow Jones Industrial Average. The second was to gather price data, and then I used a tool to compute the sentiment of these articles and combined it into a feature set. And then again, finally, the output is predict if the next day Dow Jones will rise or fall based off of current information. So again, it's simply two features. One is yesterday's Dow Jones change, and second is the average sentiment of yesterday's Dow Jones articles. And then the outcome is a binary classification of will the Dow go up or down. So again, this is kind of a workaround to doing real-time series analysis. I'm just looking at binary or two features from yesterday to try and predict today's. And again, depending on how you look at this time frame, you could also say this as today's information to predict tomorrow. So I'm not using any information from that day's news or anything like that to try and predict the outcome, just to remain fair. And here are my sources for data. This Alien News API, it gives you a lot of cool things that you can do to collect historic news articles. And then I also used Yahoo Finance just to get the basic data about how it did historically. So this news API, it actually gives you a couple different ways of accessing it. One of them is in Java. I use Java just because it was most comfortable with what I'm used to programming in. So I'll try and run through briefly the important things. So you can have a search query. My search query is Dow Jones Industrial or Dow Jones Industrial Average stock ticker symbol or the Dow. Again, so the language had to be English. I'd made this big for loop that basically iterates for every day over the last year. So that's why that's 365. Find the news articles that are between 365 days ago and 364 days ago. So this is basically from midnight of the start day to 11:59 essentially of that day. And then I filtered this also by the source ranking, had to have an Alexa ranking of in the top 2,000. So this is just, it needs to be within the top 2,000 most popular websites in the US. This was to filter out some like low-level blogs and stuff like that. I just am using this as a proxy for authoritativeness. It needed to be fairly popular. And then what was returned was actually a list of a maximum of 10 articles, and I got the sentiment and a value. So what I did to compute this into one feature was I actually created an average score out of these. So I just made a total. If it was a negative sentiment, I subtracted the sentiment from that. If it was positive, I added it. So all the sentiments I got back were between 0 and 1. Doing this made me create a score that was, and then so what I did was I divided by the count of articles to make sure that still was averaged between -1 and 1. So the best sentiment you could possibly have was a 1 sentiment, the worst was a -1. And I just did this for every day over the last year and wrote the output to a CSV file. So then I went to Excel to combine the data. So you can see on the left, this is the data I got. This was just the historic returns of the Dow. And then right here is actually my output from that little process that I did in Java. So you can see what I did to combine them was this VLOOKUP function where I'm basically looking at the date and subtracting 1, so I'm taking yesterday's data and taking my average score from these news articles. This is the average sentiment per news article, and combining it based off day. So this was actually fairly difficult because one of the problems I ran into was that I was collecting news data based off every day of the week, and the stock market only trades on weekdays and non-holidays. So you can see down here, I ended up with actually a lot more values for news sentiment than I did for actual trading. So one of the things I had to do was decide how am I going to combine these things, and I decided just because it was most practical for Monday's trading, I only looked at Sunday's news articles and threw out the articles that were from Friday and Saturday. This could have been maybe improved on. Maybe I should have averaged all the sentiments from those days, but this was just the easiest way to do it in Excel. So again, you can see like this stock data is from the 28th, and I'm pulling the score from the 27th. And then you can see, like, for example, down here, the stock data jumps from the 9th to the 12th because that was a weekend. And my sentiment for the 12th is actually being pulled from the 11th news articles. So just to simplify this down and to actually give something to, well, this isn't quite exactly what I gave to my modeling software, but I computed the actual change next. So I took the adjusted closing price minus the open price to get, no, I think it was actually the, the close minus the open was to get the change, and then I combined that with the sentiment, and I did some basic analysis that I can show you. So basically, I found out that the Dow went up 55% of the time, and the news sentiment was positive 52% of the time. And the T-1 sub T-1 news sentiment and the polarity of the Dow matched 55.3% of the time. So that was not that great. So this proves that the news does not always know what's going to happen in the Dow the next day. So at this stage, I was starting to get a little nervous because this didn't look that promising. But one of the good things was that the classes were actually fairly even, so I didn't have to do I didn't really have to worry about the modeling just always predicting positive or something like that. That was actually kind of good that the Dow was only 55% positive. The other 45% was negative, so that kind of made things a little easy. So again, here's actually the data that I fed into Orange. So I gave it a continuous variable that was the sentiment, because I didn't want to lose that data about how good or bad the sentiment was on average. So like this would be a very strong sentiment, and then you can see like negative 0.003. There's some that's very weakly negative, so I didn't want to lose that. But what I actually did do was I converted growth into a binary yes or no variable. Did it go up or down the previous day or not? And then the feature that I'm actually trying to predict is actual growth. And again, I converted that into a binary, just 0 or 1. And you can see they're not always the same because this is yesterday's growth. So if you look up and one to the right, it will always be the same because I'm looking at yesterday's value as a feature. So what I did next was I fed all this stuff into Orange. So I was able to select my columns. I just looked at T-1 sentiment, what are the features, and if it went up the previous day, target was growth. So if we look at the data exploration here, what this is actually showing is blue values these are grouped by the actual performance for the next day. And red is it went up the next day, and blue it went down the next day. And then it's graphed by the previous day's sentiment. So you can see there's not a whole lot of deviation here between the two different groups, but it was slightly more likely if sentiment was above 0, there was a little bit of difference. The next day's performance was on average better, and then if sentiment was negative, there was a little hump here that shows that the growth the next day went down. But what's actually even more interesting was the previous day's performance. So this is grouped by basically blue went up the previous day and it went down again. So these are values where it went down twice in a row, and this is where it went down the previous day but went up the next day. So if it went up, or this means it went down yesterday, it's pretty even for the next day. But actually, if it went up yesterday, there's actually a fairly big difference. It on average went up again more often. So that's kind of weird. It's showing that maybe you can predict just if it went up yesterday, maybe it's going to continue to go up the next day. That's something that I found. And these again were the two features that I'm using to predict. What I did was I just threw this data at all the different types of models that it could accept, and just to see what would happen. And in my results, it turned out that naive Bayes was actually the most accurate classification. It got it right 61.4% of the time, which again is not great, but I went in knowing that my accuracy was not going to be that great, and considering if I had just randomly guessed, it kind of told me that I would have got a 55% accuracy most of the time. So this was actually a fairly good result. And again, I'll show the confusion matrix for naive Bayes. What you can see is happening, it is biased towards predicting 1, with 187 predictions being that it will grow the next day and only 64 being no. But again, in the actual data, it was kind of biased towards being growth as well. So I did a little bit of analysis, and what I actually found, if you compute a kappa statistic based off this, I actually found that there was an 18% kappa. So that means weighted based off the underlying class values, I did 18% better than just randomly guessing, basically, which was good because, again, according to that efficient markets hypothesis, I shouldn't have gotten anything. I should have just had a kappa of 0 if you believe strictly about the efficient markets hypothesis. So this was pretty interesting that I was able to find something better than just randomly guessing. So the next step I did was to actually figure out again if I had this information, if I had this model data, and listen to it every day, how would I do compared to just the market? So this is unmanaged. Basically, it's just saying I'm starting with $100. I'm going to just put $100 into the Dow Jones at the first day a year ago. And if I don't do anything at all with it, I just let it sit in there and sold on the last day of the year, I would have went up 13.38%. So this is compared to my managed portfolio. Again, I'm starting with $100 and I'm looking at this growth prediction. So if my model is telling me to buy on a certain day, I do buy. But if the model says do not buy, then I basically am just sitting out and not going to buy anything. So that's why on this day my model said do not buy, so I just am transferring down the previous day's money. I didn't do anything with it. I didn't gain money, I didn't lose money. But on days that the model says buy, you can see that it's different than the previous day because it was actually accounting for the percentage change in the stock market for that day. So going through this whole process throughout the full year, I found that if I had listened to the model each day, then I would have 13.64% gain, which is about a 1/4% better than if I had just not done anything at all with my money. So I did slightly beat the market, hypothetically. So this was actually a really cool result. Again, theoretically, I should have just done the same as the market or worse by trying to manage my portfolio, but I was able to take out a slight edge. So that was pretty cool. I was pretty happy about that. But again, there were some problems with my model. It was a little bit too simplistic. And again, this is taking the best. This was the best model out of all these different tries. All the other ones would have done worse than this. So I'm kind of biased in how I chose from the beginning, and this doesn't necessarily mean it would work in the future, but it was a pretty interesting project and I learned a lot. Again, some of the things I would do to improve this project was I was just taking the news API's word for the sentiment, and under some manual analysis, there were some articles that were marked with neutral sentiment, and I ended up just throwing away the neutral sentiment articles because I didn't know what to do with them. I couldn't really add them to my total or not because there was no way plus or minus to really do anything with it. But it seemed like from my manual, looking at some articles that were marked neutral, they were actually very negative or very positive. So I might be able to do a different way of analyzing sentiment to get a better reading. Again, I only looked at 1 year time frame, so there's definitely a lot more data out there that I could have looked at, but that was kind of due to limitations with that news API. You couldn't go back too far. And again, this was just a binary classification. More sophisticated stock market algorithms all do regression because traders are ultimately more interested in how much will it go up versus will it just go up or not, because there might be better opportunities elsewhere if they can look at the total amount that it's going to go up rather than just maybe it'll go up $1. Again, there's a lot more information about the Dow in general. You could possibly search for information on all the component members to create, again, a much more robust hypothesis of if that total index will go up or not, but that would be a lot more complicated. Again, doing real-time series analysis, so you can do things like sliding window analysis where you're looking at the past 7 days rather than just one previous day. And then again, as I mentioned, I threw away Friday and Saturday's news because it was just more convenient just to look at Sundays when making Monday predictions, and I could probably do something with that data to combine the news sources. So Again, this was a very interesting project. I was sort of surprised that I got any positive results. How small it was, just 0.25% is not very big. But it was pretty cool, and I'd love to answer any questions in the forums. Thanks.